Hey everyone, welcome back to Corporate Decoder, the place where we always try to find the real story hidden in the numbers. Today we're diving into a filing from Cineverse Corp that has some interesting moves, especially when it comes to giving their team more stock to play with and how the shareholders feel about it all. First off, if you like getting straight answers and understanding what these corporate reports actually mean for the companies you care about, hit that subscribe button and make sure you join our Discord community linked in the description below. It is a fantastic place to share insights and ask questions about these filings. So Cineverse Corp made a pretty significant change to their employee stock plan. Think of it like this: they decided to put more shares, more company ownership pieces. Aside for people who work there, they increased the number of shares they can give out through this incentive plan from about 2.5 million to over 3.5 million. Why did they do this? Well, it is a common way for companies to incentivize their employees to make them feel like owners, and hopefully as the company does well, they all do well. It is like giving your star players a bigger stake in the team's success. This particular change is documented as an amendment to their 2017 equity incentive plan. Now moving on to what the shareholders got to vote on at their big annual meeting. They had 5 proposals up for grabs. First up was electing members to the board of directors. This is pretty standard stuff, where shareholders get to have a say in who is leading the company's strategy. We see names like Christopher J. McGurk, Peter C. Brown, Mary Ann Harford and Patrick W. O'Brien all up for election. The numbers show a pretty strong showing of votes for these directors, suggesting shareholders are largely comfortable with the current leadership. For example, Christopher J. McGurk received over 4.4 million votes in favour. Then came a very important vote concerning executive compensation. This is where shareholders give their opinion, a non-binding one, on how much the top brass is getting paid. The results here are a bit more mixed. While about 2.7 million votes were for the executive compensation, almost 1.8 million votes were against it. That is a significant chunk of shareholders saying they have concerns. This often sends a signal to the board and management that they need to reevaluate their pay structures. Following that, shareholders voted on how often they want to have this say on executive pay. The options were 1 year, 2 years, or 3 years. The majority here clearly favoured a vote every 1 year, with over 4.4 million votes for it. This shows a strong desire for regular input on executive compensation. The company has taken note, stating they will hold these advisory votes annually until their next required vote on the frequency, which won't be until around 2031. Now, this proposal actually relates back to what we talked about at the beginning. It was for approving the amendment to their equity incentive plan to increase the number of shares available for issuance. The shareholders voted on this, and it looks like there was a split. Around 2.6 million votes were for approving this increase, but a substantial 2 million votes were against it. This indicates that while some shareholders are comfortable with giving more stock options, a significant portion has reservations. This is a key point to watch, as it signals potential shareholder concern about dilution or the overall value being offered through these plans. Finally, the last item was to ratify the appointment of their independent auditors, EisnerAmper LLP. This is a routine but crucial step in ensuring the company's financial statements are independently verified. The results here are overwhelmingly positive, with over 11.4 million votes for ratifying the appointment. This suggests confidence in the firm chosen to oversee their financial reporting. So what is the story here? Cineverse Corp is clearly trying to energize its employees and management by offering more incentives through stock plans. The board elections got a thumbs up and the auditors are good to go. However, the vote on executive compensation and the increase in shares for the incentive plan both show a divided shareholder base. A lot of shareholders are saying, hold on a minute, when it comes to how much top executives are paid and potentially how much their own ownership stake could be diluted by issuing more stock. This isn't necessarily a bad thing from a company's perspective if they believe these incentives are crucial for attracting and keeping talent. But it's a definite red flag for investors who are cautious about excessive dilution or compensation that doesn't seem aligned with value creation. Looking at the bigger picture, Cineverse is navigating a tricky path. They're trying to grow and reward their team, which is essential for any business. But they have to do it in a way that keeps a large portion of their investors happy. The slight majority in favour of the stock plan amendment and the significant opposition to executive pay suggest that the company needs to be very clear about the link between these incentives and actual business performance. If the company can deliver strong results and demonstrate a clear return on investment for these stock grants, then the shareholder concerns might subside. But if performance falters while compensation and dilution continue, we could see more friction down the line. Alright, that is our breakdown of Cineverse Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think increasing stock incentives is the right move, or are the shareholder concerns valid? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.